Hi, everybody. Welcome back to another edition of VCTV. I previewed this just moments before on blockchain and crypto today. That here on VCTV, we'd be breaking down the world of tokenization and, more importantly, how it's going to impact financial futures for everybody, enterprise, consumers, all of us. What does this mean in terms of the world of decentralized finance? What does it mean for current status of finance? What does it also mean when we talk about things like NFTs, non-fungible tokens, or when we start to look at the future of real estate and so much more? That's what we're going to be talking about today. We've also got a special guest that's going to share a little bit more with us as well. But I'm your host today, Kyle Ellicott, and before we get started and introduce my co-host along with our special guest today, big thank you to the LaToken team and to Maria for making today's episode of VCTV possible. So make sure you check out latoken.com if you haven't already. Click the subscribe button, give us some thumbs up because it's going to be a great episode. Share the episode as well with all those that you know, and also the comments box. Comments are open. Would love to hear from you. Say hi. Tell us where you're saying hi from around the world. We'll do our best to give you a shout out as well. If you got any questions, we will try to do our best to ask them in real time as well. So see if you give a little shout out, we'll give you a shout out as well on the camera. So hope to hear from all of you. With that being said, let's go ahead and jump right in. Gary Fowler, we're going to kick it off with you. A quick introduction and background.
Yeah. My name's Gary Fowler. I'm a serial entrepreneur and investor. I've done 17 startups, involved in 2 unicorns, original management team at Click Software, sold to Salesforce for $1.35 billion, and also Eva.ai, which is an AI HR tech company that we started a little over 5 years ago with my partner, Dr. David Yang. Love artificial intelligence and quantum computing. Written 127 articles now on AI and quantum. You know, AI is the new electricity, and it's really driving us forward. So it's great to be here. I'm also the CEO, co-founder, and president of GSD Get Shit Done Ventures. There's some parrots alongside of me here if you hear them. Couldn't get home, Kyle. I was in my little sports car, and I couldn't get to the house. So I got parrots right alongside of me here. Anyhow, right now, normally I'm in Silicon Valley in St. Clair, but right now I'm in my place in Palm Beach, Florida.
Wonderful. Thank you so much, Gary. As I told everybody today, we're going to have a fun episode, so get ready. We've already got parrots. We may have some more special guests as well. So continue to say hi, drop in your comments, your thoughts, etc. We'd love to see and hear from Adrian. Welcome back to the show. A little intro, a little background. Adrian, you might be on mute there, but it's hard to hear you right now, but we'll bring you back here in just a moment. David, welcome to the show. A little intro, a little background, please.
Thank you very much, Kyle. Good to be here today. Happy Friday to all.
Can you hear me okay?
Yes, Adrian, hold on one second. Go ahead, David.
My name is David Towell. I'm president of ProChain Capital. ProChain Capital is a crypto-focused hedge fund. We've got a multi-strategy approach. We invest in tokens. We have some systematic trading that helps bring down the volatility of our long positions in the tokens. We have short positions in tokens as well. We expect that market will become more liquid and frankly more dynamic as time goes on. We also invest in public companies that are involved in the payment space. We now have Coinbase, Kyle. We'll talk about that, I'm sure, but loads of others as well: Visa, MasterCard, PayPal, Square. The list is getting longer, thankfully, and we think that that's a really important part of our portfolio and part of our strategy. In addition, we also have a minority part of our portfolio that invests in venture companies, startups, and so forth. So we have a very, hopefully, from our perspective, very well-rounded portfolio of investments. Thank you.
Absolutely. Congratulations on Coinbase as well. I believe that there is some talk that Binance may have listed them on their new stock exchange as well for fractional shares. So in addition to Tesla, which was the first coin. So David, I'm gonna pause there because I know you have more to tell. So I was just previewing that for the audience, but I do like it. And everyone keep saying hi. We're loving to see from all of you. Jerry, welcome back to the show. A little intro, a little background for everybody, please.
Hey, Carl. Nice to be back. I'm hearing these birds in the background. I don't know if it's my hearing or is it the video recording?
It's Gary. Gary's hanging out with parrots today. We've got some extra special guests on the show today, so we've got a little little action on that side. So it's not you. It's real. Don't worry.
I thought I was hearing sounds here. I'm thinking to myself, what's going on here? Yeah, so hi, everybody from London. I'm a fintech expert and author. I just published my book. It's called The Financial Revolution, Bitcoin, Blockchain, and the Democratization of Wealth. Basically, I'm a firm believer in the new trend of decentralized finance, tokenization. I believe in the digital disruption. I believe in the acceleration of all of this. We are now busy with NFTs and with anything that has to involve financial disintermediation. And we also setting up projects right now in regards to digital art, assets, and security. I've been in the space for quite some time, and I'm looking forward to be on the panel today and to share ideas with everybody out here.
Wonderful. It's exciting to have you. Adrian, we're going to try you one more time, and if not, we'll come back to you a little later. I can give you a quick intro, but do you have a second to give an intro? Oh, looks like we can't hear you, so no stress, Adrian. Everyone, if you haven't met Adrian before, he's an outstanding angel investor. You should definitely reach out to him. He'll be on the show all day, so don't worry. He'll be right back. But last but not least, Ami, welcome to the show as well. I know you've got a presentation for us. You want to actually share a little bit more about the company that you've presented, and I'll let you get that queued up. So if you could go ahead and share your screen with that on it, please. And everyone loving all the great comments. Thank you so much. I'm trying to keep up with getting them all on the screen, but we're all super thankful for it. So keep them coming. All right.
Cool. So maybe just a few words about myself, and then I'll kick off the presentation. So my name.
Yeah, Ami, real quick, I need you to share the presentation so I can bring it up. I don't have it. I'm not seeing it right now. But then yes, go ahead.
It's on the screen now. Yeah.
It is not.
Okay. Oh. Sorry. Okay.
All right, there we go. So yeah, go ahead and share a little bit more, and then go ahead and jump in. You got 5 minutes on the clock. Go ahead.
Sure. Very quickly on myself. I mean, I have a background in finance and banking for more than 20 years internationally with Citi, Dutch Bank, etc. And then I've been in crypto for the last 6 years. My company in the UK at that time was the first to get into the UK sandbox, the FCA sandbox, with the crypto payment model, and then since then I've done other things, and for the last year we're working on this Actina project together with my partners. So that's a bit about me. So about Actina. So the Actina ecosystem we are building is focused on one mission, and the mission is tackling the global obesity. So obesity is becoming a more and more global pandemic. At the moment, 40% of the global population is overweight, 20% of the population is obese, and the last decade, obesity moved in two directions. One direction is from rich countries to poor countries, so it's becoming more and more a poor country issue. And the second direction is moving from adult population to child population. So we're seeing more and more children having obesity issues, where we're seeing for the first time problems of diabetes in the children population, even newborns, which is completely new phenomena. And that's again is due to two main things. One is inactivity, and second part is nutrition. Obviously, these are the two pillars, and we're trying to tackle that through the Actina ecosystem. How? We obviously, I mean, the bottom line is we're trying to incentivize people to move more and people to learn more and to eat better, right? So we're having ActiCount, which is our app that incentivizes people to move and counts the activities, and we have an educational platform which is Actina Academy that allows people basically to learn more about nutrition, about healthy lifestyles. Around that, of course, we have a wallet and a cashback mechanisms, and everything is based around the Actina coin or the Actina token that allows people basically to monetize their activity or their learning, and then as a virtuous circle incentivize them to do more. And the Actina, again, the Actina token is not only on one side we have the users of the app and people that are incentivized to move, but on the other side we have merchants and we have other app that can join the ecosystem, and that way we're able to leverage on a broader community. So how it works is very simple. Let's say I want to buy something of $100 on Amazon, for example. I'll go for a quick run or a longer run, and I can make maybe 500 Axinas. That gives me $5. Another, I do an activity on the education platform that gives me another 500 Axinas and $5 again, and I can use right away these $10 as a discount to buy my $100 item on Amazon. And all this is, of course, all seated in a wallet, where the wallet can be charged both as a fiat and as Axinas. In terms of market opportunity, of course, this is sitting at the intersection of many markets, but let's say just the loyalty programs market alone is around $180 billion yearly. E-commerce is, of course, a multiple of that, and sport industry as well. So we're sitting at the intersection of a few large markets, and that's only talking about the B2B and B2C at the moment. And of course, in the future, B2G is a very strong channel, since a lot of government incentives are coming into tackling this issue globally. At the moment, there are only two competitors in the market. One is Sweatcoin with 5 million users. The other one is BeFaster that is launching actually as we speak. And the difference between these two is, one is the length it takes to convert the rewards on their platform. It takes much longer. And the second problem, these are closed systems, so they are not open to other apps and open to other users. Our client acquisition will be can be sped up and will be cheaper because, again, we're opening up the system. It's not only our applications, but we're offering API to other apps, and also we can have client acquisition through the merchants, right? So there are two additional channels besides the typical channels channels that we can use as digital marketing, etc. Revenue model is through the cashback, special offers, of course, revenue sharing with the merchants, and at the later stage, as we are planning to issue virtual cards and physical cards potentially, then we have transaction fees as a normal fintech. We're looking, as you can see, depending on the different projection of cashback, we're looking to break even in later this year or beginning next year, and from there is upwards profitability. Main milestones for us is the launch this quarter. We move into virtual cards by the end of Q4. Then we ultimately we want to ask for a money license and become a full digital wallet. And that's just the team. So basically, Stefan, the CEO, is a PhD and entrepreneur as well. I've been an entrepreneur for a long time, and we have been joined as an advisor by Prashant Qatar, who has sold his loyalty business to Gift, which is the largest platform now with more than 45 million users. That's in a summary our project.
Thank you very much, Ami. Jerry, any initial thoughts or questions or feedback for Ami?
The slides went kind of fast. If I could see the slides with the dates, the one that says the months and the year, the milestones. If I could have a look at that would be great.
Sure.
We can circulate that deck. Yeah, that was one thing I wanted to give us feedback as well. When I'm looking at your timeline, it shows just Q1 or Q0, Q1, Q2. What is that time frame, right? Is that starting today? Is it starting next year? And I noticed on there, I mean, you had 22, 23 at the end, but it still wasn't clear because right now we're in Q2.
That's right.
And so I would maybe encourage you to kind of and not to get too nitpicky, but kind of reshape how that slide is designed also to Jerry's points, as well as show us kind of what you've done to date, maybe in gray, for instance, and then highlight the rest in color and be very clear that this is Q1 2021, Q1 or Q3 2022, or 21, excuse me, because right now it kind of all bled together. And to Jerry's point, I was trying to figure out if that's now or later. And in Q1, you said you're going to do an IEO, but again, it's Q2. So have you already done that? Have you not, et cetera? Like just kind of, making that a little clearer for us, I think would have been great.
Understood, of course, yes.
David, oh, go ahead, Jerry. Sorry, go ahead, Jerry.
Sorry. One more question. You said the one competitor has already 5 million users.
That's right.
Is that because that's quite amazing. 5 million
Yeah.
people. How does that token work, and where do they, where's the ecosystem based on? I'm talking about the competitor, just so I can understand what you're trying to do.
Yeah, so they've been around for 3 years now, and they have built 5 million users. I don't have the statistics on active users actually on their platform, but we used a lot of the feedback that we see from what they've built. And as I mentioned on the presentation, the main issue is the fact that users are complaining it takes a lot of time to convert the reward or to monetize the rewards, and that's why instead of putting the rewards directly to the merchant, we use them in a mechanism basically where people can use them as a complement to fiat instead of only being able to monetize the rewards.
Okay, then on that point, which merchant can you use to collect on your?
So we're using a cashback mechanism. So most of the cashback platforms, they're linked to thousands of merchants, and of course, any merchant that has a loyalty or referral system, usually you can plug in through an API directly, and we can log into. So the Amazon's, Apple, etc. That's an obvious ones, but also we are developing local merchants network as well, because obviously depending on where people are located, we use different brands and different merchants.
Okay, so there's an on-ramp, a fiat on-ramp, and a fiat off-ramp, so to speak.
That's right.
From fiat to the token to the ecosystem. So you go in and you go out.
That's right.
Then what's the point of having the token in the first place?
No, the token is a complement, right? So it's not the token is a complement. So if I need to buy something for $100, as I mentioned, I earn the token through the activities. The whole point of this is incentivize people and children to move and to learn about health and nutrition, right? So through doing these activities, they earn these tokens. This token will be the discounts, the equivalent of the discounts they get on their purchase. So that's why you have a mix of fiat and token at the same time.
Okay, but the initial, so going back to the timeline that Kai was talking about, so the IEO is not executed yet. But
no, we are in the IEO process now.
Okay, you are in the IEO process.
Yeah, on LaToken.
The investors are buying the tokens, not the participants, right?
Yes. So the investors are buying the token. The investors can at a later stage either use the tokens themselves as users, or they can sell them back into the market. There's a limited supply overall of the token at the moment.
So, let's say there are some healthy people that are not obese and they have the token and they, which mean they put it back into the market. How would that go? Let's say they buy a bunch of tokens. Like, how would they get their money out or in?
Yeah, so we have two different tokens. So there are tokens on the wallet. So there are tokens that you earn, you cannot sell in the market. You can only convert as rewards. Token that you buy in the market, you can sell back. So there are two different categories of tokens.
So it's a utility token and a security token, if I get
it
right.
It's mostly that's right.
I'm just trying to understand how the whole system goes together. And the security token, is it regulated, and where is it regulated? Where are you based?
We are based in Singapore.
Singapore, okay. And is it regulated by Singapore, by the Monetary Authority of Singapore?
We are in the process of getting approval. Yeah.
So you're already launching on the IEO, but you're not regulated for the security tokens yet.
Yeah, at the moment, sorry?
Are you excluding U.S. accredited investors as well?
That's right, yes.
I'm just asking a lot of questions because security tokens is a whole.
It's okay. Jerry, I'm gonna pause you.
Okay.
I'm gonna pause you real quick because these are great questions. I mean, I'm gonna make sure that you and Jerry are connected offline because he's bringing up a lot of good questions for you that I think you probably need to get not only answered but also maybe included in the presentation or in the pitch when you are talking about this. Because if he's having these questions, if he's having these questions, David's probably going to have these questions, which means the audience, who you're pitching out to may have these questions. While it's a very, very good presentation, these are just some good feedback points for you to think about. So David, sorry, Jerry, I didn't mean to pause you. I just wanted to make sure we got a few from David. So David, any questions on your side?
No, all the questions that have been asked are all valid. I'm going to take a little bit, of a different approach in the sense that I think the business, it is a good business. I like the idea. To go to Jerry's point, though, about the tokenization part of this, I've heard this before. I haven't been the one that asked this question, but you always need to think about these businesses in the sense of, is the token really critical? Tokenizing things is nice and makes it much more transferable. The question is it really the best way to go ahead and do it? And again, you don't need to answer me that question. You need to answer that question. The only other point that I'd make, and this is just, again, a suggestion, I think your biggest supporters and potentially even investors may be life and health insurance companies. And you really should look to those folks, because not only do they have a vested interest, but they also have capital to go ahead and deploy, both on the kind of, endowment side, so to say, and then even as part of their working capital. So they may be some of your biggest champions when it comes to the endeavor.
I agree. Yeah.
Yeah, and on that note, just to tack on to David's, I mean, I've seen a lot of this in the past around wearables and in IoT. So the idea that, wearable devices could be worn to help fight against obesity as well. So to David's point, does it really need a token? Does it really need to be tokenized? How are you going to get ahead of those projects that have not worked? Why is the time now? Kind of question. In a typical meeting, that's probably one of the first questions I would ask you is why now? Having seen this not necessarily play out very well over the past 10 years, why is this the moment to go down this path? And I think you've got a lot in there. That's just one thing to think about too, because again, there's a lot of opportunity still there, and will be a lot more to come. So how do you also play into that world as well? So Ami, the point is we've got good feedback for you. It's a good project. We're happy for you and very thankful that you took the time to present it to us. So thank you very much.
Thank you for the time.
Of course, a quick shout out to the audience one more time as to where they can find you and the company online to continue the conversation. And then I'll make sure you're connected to David and Jerry afterwards.
Actina.io is our website. All the contacts are there and it's easy for everybody.
Wonderful. Thank you so much, Ami. Have a wonderful day. Thank you. Have a good one. David, Jerry, let's switch into talking about tokenization following Ami's pitch. So tokenization, you both got a lot to say. So rather than just asking you a general question, I'm just going to turn it over to you as my co-host today. So David, to you, tokenization, give us the rep. What do you see going on?
I guess to piggyback off of what we just went through, tokenizing anything and everything, may not be the right thing, but we may be going through that euphoria or excitement right now. So, beware. I focus on, with respect to our fund, frankly, the tokenization of the most boring, most plain vanilla, largest market assets. So we're not interested in, the best front page stories, top ticking in terms of, a piece of artwork or something along those lines. To us, it's much more fundamental stuff that have much bigger addressable markets that really are going to disrupt things permanently for the rest of time. And just one additional point, and I've made this on previous shows, and I'll continue to make it. To me, the world has done this a little bit backwards. We went ahead and we digitized services with the advent of the internet. We're now just getting to digitizing assets. To me, digitizing assets is such a much more basic activity than digitizing services. Services are so fluid. They differ so much one from the other, quality, timing, so on. When it comes to assets, they're much more static. They certainly should be governed by digitized means. And frankly, the reason that they haven't been, I think, is because the lobby of folks that control those very valuable assets and those very valuable markets is very, very strong. Bankers are not weak. Any folks that are involved in the financial system or in the title system are very, very strong, large people, large companies with a lot of money behind them. Once this goes ahead and goes ahead and gets tokenized and democratized, I think we're going to see a serious upending of markets. The same way that once equities were no longer in the hands of daily brokers, but yet traded electronically. This is going to be much more revolutionizing than that.
Thank you, David. With that being said, Jerry, I want to turn over to you. Any comments to add, but then also your view of what you're seeing in this world, having focused on fintech, both as an author, but also as an investor and so much more. What are you seeing? Anything to add into David's point, and then what further are you seeing?
I can only completely agree with what David just said. I mean, he nailed it on the head. I think it's the big banks and the big financial institutions, the Goldman Sachs, as well as the JP Morgans and all that are controlling the markets. And I believe, and that's what my book is pretty much about, I believe that crypto, decentralized finance, blockchain will democratize the wealth front. It will democratize financial services. It will democratize wealth in general, because I believe the tokenization of assets is what, like David said, long overdue. We should have done that a long time ago. You see, for example, now with the Coinbase IPO, how fast things can go. It started less than 9 years ago, and it went from zero to hero to 100 billion market cap, just on day one. And so I think we will see a lot of that now, especially with all those SPACs that are coming up and people investing left and right large amounts of money. But what I see the most is that there is a fundamental shift with crypto being in the limelight now. People are getting involved in Bitcoin, CBCs are being announced left and right. So in the future, what I see coming is that a lot of people, I think what will become mainstream before crypto will be CBDCs. For the simple reason is Bitcoin is decentralized, and that was the whole plan of Satoshi Nakamoto. But CBDCs are centralized, and they will be on DLT, and they will be pegged one-to-one to a national currency, which will give ordinary people that don't know how to go about with wallets and crypto wallets and keys and all that, will give them some kind of confidence and comfort knowing that it's backed by a government. But then again, the CBDC will be bound by borders, whereas crypto is boundless and borderless. But because of the CBDCs, you'll see a lot of adoption, and parallel to that, you'll be able to enjoy crypto or get involved with crypto and stable coins. So I think what's going to happen first is, number one, I think regulation needs to be in place. That's one of the biggest obstacles in all of this. That's why I was talking about security tokens and all that. There's got to be some kind of regulation for it to be able to be traded. And then you will see once there is adoption of crypto, you'll see a lot more tokenization of assets on blockchain. And I think it's going to be good because you'll have more retail investors entering the market. It will lower the entry barrier. And you will see a lot more liquidity in the markets because more people will be able to participate, and you won't have to go through the gatekeepers, the big brokerages or whatever. You'll be able to just join through a simple app or platform. So the decentralization is going to go a long way in democratizing the financial markets.
Mm-hmm. I think you're right. And central bank digital currencies, just for the viewers tuning in, CBDCs as well. So Adrian, any comments to add on to Jerry and David's points and your view of tokenization right now?
I'm following these days the changes in banking legislation in the United States, allowing banks to play more into crypto which will allow a lot of Americans which didn't have access to this market to enter this market. And even this week, I saw there is a theory that it's very possible that in the next 2 to 3 years, Bitcoin to increase its value with like 1,500%. It's a theory, and I see more and more decentralized autonomous organizations which are created around DeFi projects is a huge trend which I saw developing like crazy over the past month. And we are seeing anyway unprecedented levels in the values of crypto, and of course what happened with Coinbase is a huge deal. And I see that there are a few other exchanges like Kraken and also BlockFi. They want to go public as soon as possible, I believe to specs or something like that. It seems to be the easiest route. But anyway, what is happening now is unprecedented in this space. And I believe until June, July, we will see some things we don't even think about right now. But very interesting, the theory about Bitcoin. And even if it's at 63,000, it's it has potential to increase 15% until 2020, 2024, 2025.
Yeah,
Of course, it's a
you're right.
theory, but
It is a theory, and you know there's a lot of reasons behind it. But looking a little bit further into the tokenized spaces, as we've seen a little bit more conversation. I mean, you've got a major exchange being Binance coming out and offering tokenized stocks. So both fractional purchasing, and David's ready for this, and tokenized stocks that have been apparently, per reports. I just want to add that per reports that are tied to actual collateralized stocks on the back end. So they started out with Tesla, the Tesla coin or Tesla token that was backed by a single share, 1-to-1 for Tesla, and then they introduced Coin, being Coinbase as well. What is this? Is this a moment? Is this a trend? Is this what we're looking to in the future of financial stock trading? David, I'm just going to open it up to you from there. You're ready, so go for it.
Investable assets are not meant to be sliced and diced down to its most, smallest bite sizes so that every Tom, Dick, and Harry can play. It's just not the way this works. It doesn't make sense. The average Tom, Dick, and Harry does not have the time to be smart enough. And I'm not saying they're not smart enough. They just don't have the time to be smart enough in order to go ahead and invest in Tesla or anything else that's being sliced and diced. To me, it's novelty. To me, it's a flash in the pan. Maybe it will lead to something substantial. I'm not saying that it won't. It could. But as is, it is not, to me, it's front page news. It's exciting in the sense that, it's novel. It's something new. But at the same time, I don't think it is going to be, a meaningful trend. It may be a trend, but I don't think it's going to bring a lot of value. Along the same lines, Wall Street has tried to do this many, many times before, slicing and dicing things down to smaller and smaller bite sizes. I just don't think, it's the right way to go. The same thing I'll say for Dogecoin, right? I mean, unfortunately, my brother, who is a successful businessman in his own right, texted me earlier today about Dogecoin. The fact that my brother is texting me about Dogecoin, he's not a crypto investor, but he's watching. And, that's the benchmark for today, I think is insane. And hopefully, that type of speculation and eventual, letdown of some sort is not going to go ahead and upend the industry. That's my biggest fear, right? Going ahead and separating between the fundamental progress that is, in the same light that my fellow panelists have said, revolutionizing, at the same time, you got to watch out for the hype, for, the general, excitement simply for the sake of excitement, activity in the space.
think that's a good point. Jerry, anything to add on to that? And then I have a question for you as well, but anything to add on to David's point?
I don't fully agree with David. I understand what he's saying, the point about slicing and dicing, but just take, like, for example, Amazon stock. I mean, not everybody can buy 10 shares of Amazon and put on I don't know how much it is by now, the 1,800 or 1,900 per share, the 20,000 to buy stock. So I think it will open up opportunities. The thing is, if you're an accredited investor, if you're a big bank, if you have funds, yeah, you can go and buy your securities through your traditional channels and keep on going. The thing that I do agree with David is there is a big hype going on, but that's how the markets work. It's all fear and greed. It's all hype. I mean, before we had, now we're talking about CBDCs. Before we had CDOs. It's every year there is some kind of new financial instrument that is in the papers that is making the headlines, and then people get involved, and then it bombs, and the market dies out. There's always this boom and bust cycles. There's these bubbles. That's how markets have been working throughout the centuries. I mean, started from all the way from the tulipomania in Netherlands, where they were selling tulip bulbs. So now we are in a NFT boom. You could say we are in a crypto boom. Blockchain. I mean, Bitcoin is going through the roof. Eventually, I think there's going to be a major correction. I think it's going to crash big time, and not just a little correction of 10-20%, but more like along the lines of 80 and 90, like it did in 2018 when it went from 20 to $3,000, and even before that when it collapsed and it went from $300 to $24 sometime before that. So there's going to be major corrections. So the ones that are going to come out winning out of this are the people that are working and manipulating the market. And that was the part that I do agree with David, that those people that are controlling the markets right now, those are the ones that make things come and go. So the democratization of wealth, I can understand his point of view, but I think it gives people the opportunity to enter markets and get involved, because you could start small and just accumulate wealth, or you can reinvest your capital gains and come to a point where you have sufficient money to get involved in the big major things. But one point that I wanted to make is the Tesla tokenization. I found that a great idea, and also with Coinbase. I mean, why shouldn't people be able to buy into tokenized equities? I mean, I think it's a great idea, and it opens opportunities, because when a company like Coinbase goes public, the ones that make the killing are the initial investors, and good for them, and that's the way it's supposed to be. But the ones that enter the market usually don't benefit from the IPO. The IPO has this spike, and only a few IPOs keep on going upwards. A lot of them haven't gone up after the IPO. And there's many examples, and we here just had a Deliveroo, a big food delivery company that went public, and it backfired completely. It dropped 20, and then it went all the way down to minus 25% from the initial offering. So people lost billions a year. So, and how does that work? It's the investment banks that promote the stocks that control all of that. So they always come out winning, and it comes down to a simple thing: the house always wins. That's it. The house always wins.
David, go ahead. I know you have a comment, so I'll let you go.
No, there are some points that I agree with, some others that I don't. There was a point that was made about manipulation. If any market can be manipulated, I don't care what form it's in, how transferable it is, how liquid it is. If the point is manipulation, then the small guy is going to always lose no matter what. But with respect to, I think at the end of Jerry's comments, there was, allusion to the direct listing, which I do think is great, right? I think the digitization of everything kind of cuts out middlemen. And there have been middlemen since the beginning of time. And, frankly, that cost is shared by lots of people in the chain, the people paying value, the people receiving value. And so the direct listing by Coinbase, I think, is a great thing. Granted, we're going to have situations where, first day of trading on a direct listing is going to be real price discovery, and things may end up very different than the way they started. But I think most of them, will probably go off well. And as we get more and more direct listings, it'll probably become a much more, reliable way of listing, and may become, frankly, the majority, or, the way things are done on a go-forward basis. I do agree, a lot of the bankers, they're smart folks. They do their thing. They do the road shows, and they try to figure out a number. And I do agree, insiders should not get, I'm not talking about pre-IPO guys. I'm talking about the first day you get an allocation and you flip it. That's wrong. That's highway robbery. That's just not fair. That's people getting free money just because of who they are in terms of being customers of a certain financial institution. So yes, taking those things out and allowing, the investors, whether they be retail or institutional, doesn't matter to me, but letting the first day investors all play on an even playing field, to me, that's very important. And frankly, if we're talking about that basic concept with respect to democratization of finance, I am wholly supportive, because frankly, everyone gets the same information, everyone gets the same access. Go ahead, have at it, knock yourself out. We may disagree about the tokenization of the shares. I feel like, Amazon, if it really cared about its small share, they do a reverse. They do a split. So split it, and go bring the price down. If you don't want to, okay, so don't want to. That's Amazon's choice. And frankly, the ability of a guy to buy $10 worth of Amazon stock, I don't think that really does anything, frankly, one way or the other. I don't know how valuable that investment should be to that $10 investor.
Agreed. So we're gonna pause right there. We're just about at time at the top of the hour. So I want to make sure everyone comes in for their closing thoughts and where they can be found online. Jerry, David, Adrian, thank you so much for the points as well. But Adrian, quick closing thoughts on the future of tokenization as applied to finance as a whole, and then quickly, where can everyone find you online as well?
Before the last idea, I wanted to tell David that even hotter than Doge is the Ethereum version of Doge, which is called Shiba Inu, which grew like 600% over the last two months. And of course, these are meme coins without technological innovation. I like very much the idea of shares tokenization, and because the power is given back to the little guy. And $10, with $10, this is how the millions are made. And we don't have to underestimate the power of the masses, which are driven by a common goal. This should be my closing thought for today. And even a million can be started with $1 or $10. What is important is to start and to create a habit to invest. And if tokenization is the way, then be it. I can be found on LinkedIn. I answer to all the messages, of course. Happy to be here. And thank you very much for a very nice panel as usual.
Thank you very much as well, Adrian. Jerry, quick closing thoughts. Where can you be found online?
Yeah, first of all, I want to apologize. The Amazon stock is actually 3,400. I don't know where I got the 1,900 from. So, if you want to buy 10 shares, you'll need a 34,000 to get started here. This again, what David said, I agree fully with him. It got to be. It's got to be a level playing game. It's got to be fair. You cannot have something where the goalposts move around. You got to give everybody the chance to get involved and make it a living. Okay, the banks are big. They have a lot of expenses. They should be able to make big bucks, and I'm all for it. And we're all in here to make some money. But it's got to be fair. It's got to be something that everybody can get involved. And the markets are... they provide a lot of opportunities, but I still believe that tokenization and fractional ownership will provide more opportunities for more people to join. So I firmly believe in tokenization. I firmly believe in decentralized finance. And I think that's going to be the future. If you want, please contact me on LinkedIn. That's my favorite channel. Send me a message and we connect from there. Alternatively, you can send me an email. It's jerry.flores, Floros, @gmail.com. And yeah, I'm also on the WhatsApps and all that, but I try to limit social media to controllable levels. So if anybody wants to get in touch with me, feel free. It's on LinkedIn is the best place.
Thank you,
And
Jerry.
nice talking
David,
to you.
thank you, Jerry. David, close us out. Closing thoughts. Where can you be found online?
Yeah, always a pleasure to speak. Certainly with Adrian and Jerry as well. I appreciated the robust discussion, and thank you, Kyle, for leading it. In terms of closing thoughts, I am a very pragmatic person. I am not the guy who's going to be thinking of something 100 steps ahead. I'm about 2 or 3 steps forward, and that's the way we manage our fund in terms of investing. Boring and money making is good for us, and so therefore, I to go back to Jerry's point about fractional shares, we'll get there. I just don't think the current form is the right thing. I think eventually, all exchanges of any kind are going to be tokenized. I don't think we're going to have shares of stock anymore. I think everything's going to be tokenized, and everything will be able to be sliced and diced, not for the purposes of being able to simply for the purposes of allowing the retail investors, simply because of, ease. It should be. There is no fundamental reason why something shouldn't be sliced down to its smallest form, especially if the liquidity of that piece is no different than something that's much larger. So I think we'll get there, and technology allows for it, and for sure, regulatory agencies should embrace it. But in any event, I guess we'll leave the rest of the conversation for another time. Wishing everybody a good weekend. That can be found at david@prochaincap.com. It's david@prochaincap.com. And then also on Twitter at prochaincapital. Thank you.
Wonderful. Again, David, Jerry, Adrian, thank you all very much for today's conversation and talking again about tokenization and the impact on finance as a whole as we know it today, tomorrow, and years beyond. With that being said, audience as well, thank you so much for all of the great comments, the questions that came through. Make sure you do reach out to all of our investors today, including myself. We'd love to hear from you. Please make sure you add context where you heard us, where you met us, and what you would like to continue the conversation about, so we can maybe make it a productive conversation together. Also, a big thank you to the LaToken team and to Maria for making today's episode possible. Make sure you subscribe, share, and like the episode, and check out the archive on LaToken.com to hear from today's speakers and all speakers of the VCTV family of investors from around the world. With that, everyone have a good weekend, and we'll see you back here next week on more VCTV. Take care, everybody. Bye.
Thank you. Have a great weekend.
Bye, everybody.
Bye.